before we before we get started with the PowerPoint, anybody have any specific topics that you wanted to discuss or chat about? No, don't everybody talk at once. Whoops. I'm in my great room today. We're redoing my office here, so hopefully the wind just blew some papers off my desk. Um, or off the table. What's going on in the market? Nice, Tara. Well, hopefully, I can answer that small and easy question. Um, it's a pretty wild one across the board, not just in real estate. I would say in general, the overall economy is just there's a lot going on between. I don't have a slide on this, so maybe we can spend a couple minutes just kind of talking about the macro events. Um, but obviously we have, some domestic stuff happening, although I'm not sure that's having a huge impact on the economy at this point. I would say the bigger thing domestically was definitely still the tariff question. This week we do have a Fed meeting. They're expected to hold interest rates and not raise them or lower them. As we've talked about in the past, interest rates really, the short term rates, which is what the Fed controls, really doesn't have much of an impact on our mortgage rates, which is what most of us in this room care about. However, it does impact overall economic activity. Typically, the lower the rates, the more investment businesses make. So it's something to keep an eye on. Certainly I think there's only been one tariff deal that's actually been signed, and that was with Great Britain. Ironically enough, I think they're one of the only countries that we have a trade deficit with, or I'm sorry, a trade surplus with, meaning we export more goods to them than they do to us. So that was probably a pretty easy deal to make, maybe the easiest one. So I think there's a level of uncertainty still in the market, with basically none of the trade deals being completed. And then for those of you that follow the news, there's Iran and Israel have been launching missiles at each other for the last 4 days. That also does not make people feel warm and fuzzy inside. Um, Especially when the reason for the conflict is a pseudo terrorist nation getting nuclear weapons. That's never something that gives people the warm and fuzzy. So, long story short, all of that stuff is leading to a lot of uncertainty, which also makes the Fed reluctant to lower rates because they really don't know what the environment is going to be like a couple weeks from now. And lowering rates is one of the few bullets in their gun, for lack of a better way to say it, that they have. Um, and so they're being very cautious about taking away their options if there is a further slowdown. We just had a lot of agents that were, a few minutes late today, so I should have waited. I spoke too soon that we were going to be light on attendance. Um, so yeah, I know I didn't answer your question, Tara, but I think in a nutshell, the answer is that we still don't know really, but I do have some stats as to what's happened and a few predictions. But I think unfortunately more of the same in terms of overall uncertainty. Although the good thing, which so we can mention a couple the good thing is that, not a lot is changing in the real estate market, at least quickly. And then also from an economic perspective, not a ton is changing in terms of there's not a ton of extra jobless claims, although there are a few, but a lot of companies that have come out with earnings have been, kind of in line with expectations. So barring the tariff fears, which aren't really a reality for anybody yet, um, economic news overall is good. It's just the uncertainty of the future that's causing um, a lot of the challenges right now, which, as we know, predictions are pretty much worthless when it's come to interest rates and all other economic things over the years. So I think there's just a lot of wait and see, and we've been waiting and seeing for several months now. Um, really, I mean, really, with the election last year, we could probably go back to this time last year, or maybe even a little bit earlier than that, where things have just kind of been at a standstill. The reasons have changed at times, but we just really continue to not have a lot of certainty. So, all right, well, that was enough for my unplanned rant. Although, if you ask my team members, I do that really well and very often. So, thanks for the question, Tara. And I will jump into the slides here in just a second. All right. So hopefully you're here for the June market update, real estate market update. If you are, you're in the right place. If not, you're just in for some great information. A little bit about me. The one thing I actually forgot to add it to the slide today, although I was thinking about it this morning. I think most of you know that I'm living in Colorado. A chunk of my time, it's about 3/4 of the time, I'm back in Columbus once a month for about a week. But I just wanted to make sure you guys all knew, if you have any Denver or Colorado Springs referrals, we can definitely be a great source for that. So if you or anyone, any other agents that you know are looking for somebody, please don't forget us. All right. What we're going to go over today. So market trends in terms of interest rates locally and nationally. We're also going to look at inventory and selling trends nationally. And then I think last month I promised some kind of a little bit more of a deep dive into like trends based on segments of the market with regards to pricing and days on market. So I have a couple slides on that that are, you know, interesting discussion topics, and then also local trends with regards to all local trends from pricing to active listings, all that stuff. And then we have showing trends and quickly rental trends. So the one thing I always like to remind you guys, and forgive me for those of you, I know a lot of you are on here all the time, and yet I think we all need to be reminded of this at times. I know a lot of you on here tend to be educational junkies like me. And sometimes we can spend a whole heck of a lot of time going to classes and never really take anything meaningful away that we put into our business. So the one thing I like to remind you, if you're a numbers person, you're probably going to eat all this up. And you and I could jump on a call every other day and talk about a different topic because we're nerds like that. And yet, if you don't put yourself in the numbers category, I would just encourage you, don't get overwhelmed. Just pick one or two things that you can really digest and speak about very well, and then use that in your buyer and seller presentations. I really think I was on a call last week with some top producers, and one of the things that got brought up again, but I think it's going to continue forever and all of time to be a thing, is, seller interviews for agents, and agent, whatever number they were in terms of the interview, probably towards the later end of those four, wins the listing. They ask, why did I win the listing? The answer was, because you were the only person that came in with any information about the market. Everybody else just showed up to have a conversation about selling their house. And I think in what I would definitely consider to be a shifting market, I think most of you, knowing all of you most of you on this call, you would never show up to a listing appointment with nothing. And yet I hear that story over and over and over again. So email me for these slides. Rip off and duplicate as much as you need to, but just take one of these slides, put it into your listing presentation and your buyer presentation, or go on Trend Graphics if you're with consultants, and have those ready for the specific area that we live, or that the listing appointment is in. I might have just let in like some random person. Hold on. I just want to make sure. Who are you named user? Sorry, I just don't. Sometimes people jump in these rooms and do crazy stuff. So if you just entered the room, let me know who you are, or I'm gonna remove you. All right. I'm just I just removed them just to make sure, because people do really crazy stuff sometimes. So all right. So that's just a quick reminder. Please, please, please. I love that you guys come, and yet just make sure that you're taking this information and putting it to use, because I think you can win a buyer or a seller by just having a little bit of data. So people are getting kicked out for some reason. Why is this? Sorry, guys. I'm not sure who this user is. Anyways, all right. On to interest rates. Again, kind of in line with what we talked about before. So I wish I had something really exciting last week with the inflation numbers coming in lower than expected. I think if you pay any attention to that stuff, you're probably really excited that this little downturn here at the end of last week was going to be something that continued. And then Israel and Iran started bombing each other, oil prices went up, and here we are basically back to where we were before. So I think there's going to be a lot of uncertainty around oil prices. The reason why that's important is because higher oil prices mean higher inflation, because every single good basically gets transported from where it was made to where you buy it via something that uses oil, whether it's a plane, ship, or truck. And so when oil prices go up, it tends to cause prices to go up. And because of that, oil prices had been going down this year. And so now there's uncertainty around that. And so that makes people feel like there's more of a chance of inflation, which is making interest rates kind of turn around. Now, obviously, we haven't given back all of our downturn here that we've seen over the last couple weeks. But as you can see on this chart, we've really been in this pretty small range for interest rates for quite some time, really since last October. We've seen a little bit of a move for very small periods of time above, actually more time we've spent above 7% than below 6.75. But in general, we haven't seen any of the moves like we saw last summer. Or I guess last fall would probably be a better way to describe that. But you can see even last summer, we were still in this range. So in general, we've stayed pretty tight in this range between 6.75 and 7%. As you guys know, this is an average of the national interest rate for a 30-year fixed. I would say typically in Columbus, most lenders are going to be pricing, usually in my experience, about 0.25% below what the national average is, sometimes as much as 0.5%. And then when you get into FHA, you usually get about 3/4, FHA and VA, about 0.75% lower. So long story short, even though, we've seen some movement in this range, we still really haven't seen any sizable moves one direction or the other, which is good from a consistency perspective, but bad because there are still a lot of buyers and sellers out there waiting for rates to come down. Obviously, I'm sure you guys all have your scripts for that. But I think, again, if you want to talk about like talking to a buyer and seller and saying like, okay, they're waiting for lower interest rates, you can go on Mortgage News Daily and go back even further and just say, what about this chart from the last 2 years makes you think that interest rates are going to go lower anytime soon? And if they do happen to go down to 6.25, how much of a difference in payment is that going to make for you? And is that worth putting all of your plans on hold? I don't know. That's only a question they can answer. But I think when you can tell them, like, hey, over the last 9 months, there's been almost zero change in rates. And if there is a downward jump in rates, we've now locked in your price, and then you get to refinance and have a lower payment. So it's like a win-win. All right, national housing stats. So, as I'm sure you guys know, our active listings continue to be higher nationally. Ironically enough, even though Columbus has continued as one of the stronger markets in the nation, our year-over-year increase in inventory is actually higher than the average, which is very interesting. But yeah, you can see that from a historical trend. We're still below average rates pre-pandemic, or average inventory pre-pandemic, but you can see that we're definitely climbing. Our rate of increase is definitely more than it was in 2018 through 2017 through 2019. So we're definitely far above all of the pandemic and post-pandemic years. And I would expect that by the end of the year, if trends continue, that we will definitely be kind of in line with that pre-pandemic inventory averages. Total listings. So this is going to be kind of the same story. Really, the trends are the same. So not a lot of additional to talk about. This pending sales is definitely something that we want to definitely keep an eye on. I'm trying to get a laser pointer here. I probably should have done this before. So we can see that really since the spring of 2022, we just have not seen the pending listing count increase other than a small bump. And guess when that was? When interest rates went down last year in the fall. Other than that, we've seen varying degrees of negative, but overall, we've continued to have fewer and fewer listings going into contract, which has and the reason that we've seen inventory go up. So kind of just a different way to look at it, but it kind of puts into perspective the different markets when interest rates were low versus when interest rates went up and kind of what's happened, which we've all felt this, but obviously it's not always in this drastic of a graph. So I thought that was a good one to look at. This has been interesting to me. The days on market, again, even though we've increased quite a bit in inventory, we still have remained relatively flat with days on market. Obviously, the 2022 and 2021 eras, when interest rates were at 3%, we're not probably getting back there anytime soon, but we really aren't straying out of this like pretty tight range here between all the rest of the years except 2021 and 2022 and then the end of 2020. So it's just an interesting thing. I don't think there's a ton to talk about here other than it is up a little bit year over year, but I wouldn't say it's anything drastic, especially given that, inventory is up 30%. Here's another one, same thing. So even though inventories continued to rise over the last couple of years, we're still seeing the median list price. Now, Realtor.com does not publish the sales price. So we do have that locally for here in Columbus, but we do not have that for the national number. But typically, sales prices tend to trend on the same trend line as list prices. But we've been in a very tight range here for the last couple of years. So very, very interesting. I think everybody's been like holding their breath for a downturn in pricing. We just have not seen it. Again, this is a national average. You can go to places in Florida, go to Austin, Texas. I think Phoenix has felt it some, where we have seen some declines in pricing. Denver has seen some declines in pricing, but still nothing drastic enough in those areas to outpace the other areas that are going up. It's kind of been like an even exchange. So price reduced share. This has been high for a while, or higher than the average, even pre-pandemic average. However, um, what I'm looking at here, and I have it over here, is the slope of the trend line. And really, in 2018, it looks like the number of price reductions was actually going up faster than it is right now. So we are up 2.4% year over year compared to last year in May. But the slope of the trend line is, I would say, pretty much in line with the average, maybe a little bit steeper than some of these other years. But there's certainly been many other years. Obviously, 2022 was a big one where the numbers were going up. So I tend to pay more attention to the slope of it as an indication of whether the market's slowing down or not versus the overall percentage. I still think we have sellers in the market, and we'll get into this in a couple minutes when we talk about the market segments. But I think there's still sellers in the market that are overpricing because one neighbor sold quickly or for over list, and so they're going to go ahead and price that way as well. Um, there's a number of examples out there that that show kind of still unrealistic pricing at times by sellers, and that's always going to happen. But I think in a bizarre market where some stuff sells really fast and over list price, and then other stuff sits like we're in right now, I think we're even more susceptible to that. This is just looking at regional stats. Again, I think I lament with you guys that the most interesting stuff that they used to have around regional stats, they took away, which compared post-pandemic to pre-pandemic. But this still like kind of good just to see the different regions. You can see the active listing count is still quite a bit higher in the South and West, although more in line with Columbus, to be honest. But this is just another kind of indication that in spite of those increases in active listing counts and new listing counts for that matter, we just have not seen the impact in pricing at a significant level. Flat is definitely not what most of us want. But when you see a 40% increase in active listings and you only lose 0.7% purchase price, that's pretty darn good. So, and also an indication, obviously, of the fact that we were so under where we needed to be from a supply perspective for so long that those numbers, look more dramatic than they really are. All right. Anybody have any thoughts on the national picture before we jump into Central Ohio? I just talked a lot, so anybody have anything? Kendra, you look like a deer in headlights. You're probably looking at something else and just listening, but the look on your face made me want to call you out.
No, I was actually just thinking, sorry. One of my clients yesterday, there's a house here in Powell, and it's been sitting on the market, and it had one price reduction, and he wants to cut it 25,000 further on an offer. And I said, it's only 42 days on the market. 47 is the average in this price range. They've already dropped the price once. I said, I don't think we're there yet. And he goes, well, the market's turning. And I'm like, I don't think we're there yet. So when you said that, I was like, let's get into Ohio before I open my mouth, because I'm not seeing a lot of bargains yet.
Yeah, well, and I think too, again, I think part of that also is
Austin,
that,
turn your stuff up.
obviously you have certain people that have a high level of motivation, but I still think, if you don't have to move, and you are selling a 3.5% interest rate with the fun of going to 7, you're just going to be a lot less likely to be willing to give a lot of money away. I mean, there are people, who have already built another house or who are moving out of state. Those people definitely have more motivation. But I do agree with you. Plus, we know, as we'll get into in a second, just from a seasonality perspective, that once we get past the next couple weekends, the buyers tend to dry up even more. And so I think the opportunity, if it doesn't sell in the next 2 weeks, for the seller to have way fewer showings than maybe they have had over the last 2 or 3 weeks, could be significant. So yeah, I think your advice is probably good advice. Now the question, do you submit the offer and just see where the seller is, or do you wait 2 weeks and risk somebody else moving in from California who's willing to pay list price that's not on the table right now looking at it? That's the question, right?
Oh yeah, we're gonna submit. Do that again. One of the things that is interesting about this, I just had my coaching call this morning with my coach, and he said for the seller, price is always more important than the value. And for the buyer, the value is always more important for the price. I just thought it was interesting to hear that, just that reminder of who you're talking to and what their biggest or their most important thing is.
Yeah, definitely. Well, and sometimes the buyer thinks the price is the most important. Sometimes the price for the buyer equals value in their mind, whether they're right or wrong. They just want to win, right? Um, so it just depends on the buyer and their level of motivation, right? Also matters. So, all right. So this is from, I don't usually pull these stats, but for anybody that follows Chris Shea on any social media, he does a lot with Altos Research. That's where these came from. You can pull these. They've changed their website around a little bit. So I wouldn't be surprised. They got bought by Housing Wire maybe it's been a year and a half or so ago. So it seems like they're making it harder to pull this stuff for free, which is not surprising at all. Number one, because they got bought by Housing Wire, and number two, because I always thought they probably gave a little bit too much away for free. But while they still are giving it away for free, we'll use it. So this is Franklin County. This is looking at median sales price, but instead of just looking at the overall market, this has it broken out in market segments. So basically, in the top 25%, from a price perspective, what's happening there, the 50 to 75 or the 25 to 50%, and then the 25 to 50%, the 50 to 75, and then the lowest percentile here. I probably did that backwards, and that's why I was confusing myself. One of the things that I thought was interesting with the median price here, though, was definitely the slope of the increase. So you can see that like in the lower price points, they've had a kind of a steady chug up. Um, and everybody has a dip like in the winter, early spring. But then look at how quickly the increase was for the higher end. And I don't think this is necessarily out of the ordinary. As you can see, if we go back several years, you can see that, the increase has been higher. But it's just interesting to see. I think we all feel this, um, where the lower price points have maybe slowed down their increase a little bit. I mean, we're just barely back to where we were last year at this time after the seasonal dip that always happens. Um, and yet the slope of increase, even though we're, I guess, lower here at the higher end, the slope of increase has been still pretty significant. So we'll continue to keep an eye on this, but then if we come down here and look at the days on market, that was the other interesting thing. That we saw the days on market is not that much higher for the upper end. Historically, I think the days on market for the upper end has been quite a bit more. And then one other thing, I didn't highlight it, but it's also interesting, is the amount of new listings that were absorbed. Um, so we do see that there was a little bit more movement here, and yet that hasn't necessarily shown up in the price data. But still, quite a bit of the new inventory is still being absorbed at all price points. So what that tells us is that a lot of what's sitting on the market is actually the old stuff that didn't sell right away. and it's just continuing to sit, whereas are buyers are continuing to eat up the new stuff, and the old stuff is kind of the stuff that's sitting, driving up the days on market. So anyways, I thought that was interesting. I have one more. I think I have one more for just zooming into Dublin, looking at average days on market broken up by price point, um or by market segment. This was again in Dublin. um we're seeing lower days on market at the higher end. And then also like here kind of in the middle range. But then what I like to call kind of the messy middle, which is like the upper end of the middle range, is seeing a little bit more time on market. So again, I think the numbers here probably make this hard to like take it to the bank necessarily. But I think I would love to hear you guys' input on this. Um, I feel like that like upper lower end is doing pretty well, and then especially like if you're in Dublin schools at 400, those types of things. But it feels like this like Lewis Center between between maybe 550 and 700 or 800, and then Dublin maybe like closer to that 750 to 900, like maybe the older inventory, also kind of the new build inventory is kind of sitting a little bit longer than some of the very high end, and then also just that like prime first time buyer in each market. What are you guys seeing?
Hey, Troy, it's Tim here.
Yeah.
Yeah, so it's really interesting. I think a lot of it, really comes down to the house itself. So I have a real nice listing. It was 1.8, only had one showing, dropped it to 1.7, got full price 1.7, just like that. Then I just listed one in Ballantrae for 850, and I noticed one came up at 850, 875, sold immediately 2 days, just last week. Another one a month ago came out at 950, and it still went 90 grand over list price. But now two more have just come on the market. One's 950. It's pretty bad inside. It's a terror, one of the worst paint jobs I've ever seen, literally. And another one's coming on the market, looks overpriced at 9. So there's still a lot of overpricing going on. And see, when you see this days on the market, say like 17 on the screen, there's no correlation as to how many of those listings are kind of accurately priced and what's the condition. It's probably easier to sell a cherry condition house, even at a slight premium, like the one in Ballantrae that just went 90 grand over, versus one that seems it's like very well priced, but it's just bad condition. And so that's what gets tough about these macro statistics is it's when you're selling just one house as a realtor or a seller, price has got to be the correlation of the price for really the condition of just that one house matters a ton.
Now that is a great point, and I think, yeah, I don't have anything to add to that.
All right.
That was great. And I think it's definitely you're spot on with that. And I think that's where, digging into these on a micro level when you do have a listing appointment and showing the comps and what happened is super valuable, because I think if you pulled all of those listings out and showed the seller, hey, this is a property that looks on paper like it's of great value, but it's garbage condition. Or this is one that would have been, really strong at 875, but since they priced it at 950, it sat. And
I,
those,
I'll give you I'll give you one little for everybody online. Sometimes if you're listing a house, and I've done it several times before, take your seller to the other listings that are like available, like set up showings. And I'll tell you, you're gonna walk and what you're doing is comparing their house, which you're putting on the market, to actually the existing inventory. And that can be very eye-opening. It can also create a lot of arguments because they may think their house is better, and you may walk into a cherry house that's way better than theirs, but they think their house is better. That can get pretty interesting how that works. But yeah, I think people tend to overrate their house, their value, and even what's good. They overrate their taste.
Yeah, I think though the reality is, to your point about the downside, that downside is even more prevalent when if they're the type of people that overrate their house, they're going to overrate it whether they walk through the competition or
They
not.
they make they may yeah make it even higher than they thought. Yeah,
Right.
yeah,
And
it could
so I
backfire.
think, yeah, I do think though that, to your point, again, that's one of the changes, is that we finally do have a little bit of inventory.
Yeah,
And that's one of the big things, that if you're an agent that just entered the market, got your license in the last 3 to 5 years, most of your market analysis was done off of solds. And
right,
you really, if you haven't made that transition yet, you really need to be looking at pendings and actives more than
right,
you are
right.
sold, because the solds from 9 months ago when interest rates dropped to 6%, not going to be super valuable for you going into the slower part of summer historically at a 7% rate.
Yep.
So, all right, cool. Well, thanks, Tim. All right, so we're going to go into a little bit more of the generic stuff that we always go over, but hopefully still valuable. So May over May, we're looking at about, you know, 1,300 more listings on the market. So, 41% more listings on the market. New listings were up 7.6%. But this is the reason why there's more sold or more inventory, is because new listings were up 7.6 and solds were down 4.5. I'm still not sure. Chris Shea and I have had many conversations. I'm not sure where Trend Graphics gets the pending numbers. I feel like they're always 20 to 30% above year over year, even when consistently solds are negative for months and months on end. So I'm not sure where these extra pendings are. But I kind of ignore that. I've started to ignore that. But again, I mentioned it earlier. I like to mention it a lot this time of year, that we're really kind of at the peak or maybe past the peak, depending on the area that you're in. But typically May or June is usually the peak when it comes to new listings coming on the market. And it's usually a downward fall from here. There tends to be a little bit of a fall bump somewhere in September, October historically. But you can see that last year, in spite of higher rates or lower rates, I'm sorry, in the fall, we still saw inventory levels increasing. So just keep that in mind, that we would expect to see that the peak of buyer activity is probably behind us at this point. And we typically see a very steep drop off, which we'll talk about with showings once we get into week of 4th of July, which is coming up here quickly, which is crazy. All right, Dublin schools, May over May. So inventory was up 28%. New listings were up almost 20%, which is pretty significant. But then solds were also significantly down by 20%. So those are interesting numbers. The new listings, actually, I think that I forgot to update this comment from last month. The new listings were actually a little bit flat, only up 3.5% from April to May, which last year they were way down. So I guess we could consider that to be better. But pendings kind of followed that new listing trend. So we'll see if that continued. Actually, I'm sorry, they didn't follow it. Pendings were up a lot more than new listings were. So that, we'll see how that shakes out next month. Hilliard was a similar story. It looks like the pendings actually shot up even more than the new listings in terms of a steeper slope. So inventory has continued, or the absorption rate, the number of months of inventory has continued to stay pretty consistent with just above 1 month's inventory based on the solds and actives. So again, Hilliard's still going pretty strong. Olentangy looks a lot more like Dublin. Maybe a stronger increase in pendings, but the new listings kind of dropped off a little bit. However, the gap between solds and actives did kind of increase some. So long story short, I mean, the overall months of inventory still remains between 1 and 2 in most areas. So not like any crazy signs of a drastic slowdown, but to Tim's point, I think we've been in this for a while now, but we're definitely back into a market where condition matters and price matters, and you can get caught chasing the market, especially this time of year. So I think you just need to be really cognizant of the fact that we've basically, in most areas, we've reached our peak of buyer activity. I usually look at pendings as kind of an easy way to look at that. But if we go back to Dublin, we see the peak last year was in June. In Hilliard, the peak last year was in June. And then in Olentangy, the peak last year was also in June. And so I would anticipate that, if you have a seller that's been getting feedback, to Kendra's point about being overpriced, it's probably not going to get better as time goes on at this point in the year. Resale only. Again, we don't have tons of new construction on the MLS, so it's going to be a lot of the same with regards to our May over May numbers. When we compare it to new construction, one interesting thing was that with the new construction is that we did see the new construction inventory up less than the regular inventory, or I shouldn't say regular, I should say resale. But interestingly, the solds were down 11% for new construction that was at least on the MLS versus being up 11% from April to May. So I'm not sure that's super relevant given the fact that that's basically activity from last year. But when we do look at May over May, we kind of see the same thing. So it'll be interesting to see down 4% versus down 11%. So again, could be a leading indicator, could be that sellers or that builders put fewer properties on the MLS. Could be a combination of those things. But the month to date numbers, which again, we always talk about how those vary because the day of the week that we're pulling these stats can sometimes impact this, but not any crazy changes from the regular trends that we kind of saw in May over May numbers. So looks to be about the same. All right, days on market. Again, just zooming into the local market here, we do see days on market down 2 days from last month, which is good. Which is pretty typical. If we look back from April to May, it was actually down more last year, but it is up 8 days compared to May of last year, which again probably goes in line with what we were talking about. But the sales price compared to the original list price did continue its upward movement back up to 99%. So we will see what happens in June. If last year in June it started its downward trend to the lowest number was in January, we'll see if that happens this year, if it flatlines a little bit. One thing I wanted to show, and I think I might have the interest rate. So remember this chart here where we saw this huge drop in interest rates starting in August through October. Last year, we still saw, in spite of those lower rates, we still saw the overall original list price to sales price go down during that time period, and average days on market go up. So if we enter that time period at a 7% rate instead of a, you know, 6.5 all the way down to close to 6%, you know, again, be prepared and be preparing your sellers for this, that there could be, you know, there likely will be a slower market ahead. We cannot guarantee that interest rates are going to go down again. And even if they do, historically, that doesn't necessarily mean that you're going to be able to sell your house as quick as your neighbor did in April. Months of supply from a seller's market. Again, I touched on this without the graph, but 1.4 months of inventory, which is well below what we're considered a balanced market. Have to go all the way back to Q4 of 2018 in order to find inventory rates this high, but still our months of inventory is still very low. And then this is new construction, follows similar trend, nothing much to write home about there. In terms of pricing in Columbus, May's active prices were down 6.6% compared to last year. So that's definitely something that we want to keep an eye on. Because normally in the spring and some early summer, we do see kind of a peak of active prices. So if we peak out at this, the question is, does that foreshadow lower prices later in the year? That being said, our jump from April to May was still pretty sizable. And so we still are about 1.3% above last year, but our rate of increase compared to last year definitely is flattening out. And so this is something that we would definitely keep an eye on. But with inventory levels increasing the way that they have, it would not surprise me to see a flatter appreciation year unless something changes. So
Hey, Troy, Troy, this is Francis. It would be interesting on that active price number to see that segmented, because from your earlier slide, we were seeing where some of the lower price was staying on the market longer. So if that's distorting somehow, that, you know, is that 6%? Well, how's that 6% relate to a $700,000 home versus a $200,000 home?
Yeah, no, that's true. So yeah, if there are more $200,000 homes sitting on the market, is that causing the average active price to be lower? I mean, it seems like yes.
Yeah.
Especially if we're talking about, especially since we're talking about averages, given the fact that, you know, that, yeah, if there are way more 2 or 300,000. Well, I don't know if there are more $200,000-$300,000 houses anymore than 700, but in theory, I think there are, and so yeah, that could be driving that active price down, for sure. I think, yeah, it'll be interesting, and that's actually an interesting theory that I hadn't thought about. I mean, the one thing I started adding these things into the graph a couple months ago, just the difference between the average active price versus average sold price. And you can see that range has definitely tightened. It did expand a little bit last month. But yeah, that would be an interesting thing. The problem with Altos, and Chris, are you still on here? Chris Shea? I don't know if you're still on here or not.
Yeah, I'm
Yeah,
on
you
here.
are.
Yeah.
Do you have, I know you have to kind of like ask for it specially, but with Altos, I think you can get like a market, like the Columbus Metro numbers.
Yeah.
Do you have that, or do you not have that as one of your zips?
No, I have the whole Columbus market.
Have you do you know this, when you look at the whole Columbus market from a segmented perspective, are you seeing more lower price places staying on the market?
Let me see here. I got it pulled up. No, you mean as far as days on market averages? or
Yeah.
the market segments. Yeah.
Yeah.
So
The
when I look,
market segments,
yeah, when Columbus as a whole, it's actually showing kind of what we talked about before with that middle or the high middle, the 350 to 600, maybe 300 to 550 or so is
Mhm.
35 days on market, and the 600 and up is 28 days on market. So some of that middle ground is actually taking longer on
Yeah,
average.
that makes sense. That's what I'm seeing too.
Yeah. And that's what we talked about last time, why you drill down into some of these segments, is that I feel like the high price stuff is going,
Yep.
and the low price stuff is going, and it's that 300 to 500 that seems to be taking
Yep.
longer than it used to.
Totally agree.
Yeah, I do think though, and it's hard. I don't, without getting like too far in the weeds with 100 different variables, but I do think some of the areas like Linden and Hilltop where 200 isn't necessarily 200 is more like that middle high.
Yeah.
Um, those areas, and so when you, to Francis's point, when you look at this average number, there's definitely more of those properties like in Hilltop and Linden sitting on the market that were moving really fast, that also though could be bringing down the average versus obviously like a $300,000 or $400,000 house in Dublin or Olentangy, which there aren't that many anymore, or Worthington. Like those houses though are still flying for the most part.
Well, and Troy, to that, when you drill down into this, and I'm a slave to the data too, so I keep looking at that and trying to make heads or tails of it. And I like what Mandy said on Friday's call about the market just being so unpredictable, because you'll think something's going to get, we had a great move-in ready house in Powell in that upper range, and we had 20 plus showings in the first weekend, but we still only got 2 offers. Now it only takes one, and we're in contract over list, so that's great. But what the days when we were getting 10 offers, that's not there. And we probably, if we weren't in top condition, we might not even gotten those 2. So I feel like that condition, to Tim's point, is so key. But also looking at altos, because I can drill down per zip, you got to be so hyper local, because when I look at the data, like one of the hottest zips right now is 43214 Clintonville and 43085 Worthington. Those are still pushing like an 80 on the market action index, which is strong sellers market. Then I pull up Old Town East or downtown, and they're both a 29, which is basically leaning towards buyer's market. So, again, to your point, like you really have to be hyper local. We can't use the Columbus market and say everybody's having a hard time selling. Depends on where you're at. I see stuff flying off the shelves in some places, and then we see stuff just sitting. And I think this kind of data really helps you see, if you look at the Altos reports, can really help you direct buyers and sellers and what's going on in that particular zip code.
I can't agree more. And I think again, it's honestly for the last few years, ever since I've been doing this, I feel like in general the Columbus market has been moving like as a blob. But I do think maybe I need to start spending a little bit more time kind of picking a few different areas instead of looking at Dublin, Hilliard, Olentangy, which have a lot of the same dynamics, and maybe sprinkling in a Hilltop or a Linden or a downtown and looking kind of at the differences between those. Because I mean, anybody that sells in those different areas, definitely 100% the market supports what you just said. Downtown is a ghost town. In the same price point that Dublin or Powell might get. And I mean, I guess going back to your listing, just to give a comment on that, the one thing that's encouraging to me about that is that there are 20 buyers in the market, right?
Yeah, over
Like
850,
that's
over
the
850.
encouraging.
Yeah.
So I definitely think we have a lot of buyers that are reluctant to pull the trigger for sure. But the fact that there's 20 people that were willing to take time out of their schedule and go look at the property is still, positive in my opinion for the market. And I think that is exactly the story So for those of you that haven't had a listing in Powell, if you go on a listing appointment, you can tell that story that Chris just told and have validity from the fact that, hey, if we see interest rates dip by 0.5%, I bet that you get 5 or 6 or 7 offers out of that pool of 20 versus 2. But everybody's waiting for something, and most people don't even know what it is, but they're just waiting for some reason to get off the sidelines. But that's encouraging that there's 20, that
Well,
there's
that's a
20
good
people
point
looking.
because they are more cautious, so less offers. However, I would say all 20 were legit buyers. They weren't looky-loo neighbors coming through just to see what it was like. They were sincerely interested in the house. So that's to your point, it's more vetted, valid buyers as well.
Yeah. Yeah, you definitely have fewer looky-loos these days, I feel like.
Hey, Troy, don't you
Yeah.
think it's also neighborhoods like Hilliard may be a hot market, but I know just because I live in Hilliard and whatever, I've had a listing there. Ballantrae, Heritage Lakes, Carrington, Britton Farms on fire. But I drive the same way 5 times a week, and the same 2 houses in another neighborhood have been sitting. Because I've noticed, boy, they're not, I can't believe those aren't turning because the price point is mid low on those 2 houses. I think it feeds in.
Oh, you just muted. You muted.
I think it's even deeper, even neighborhoods within Clintonville, or at least it seems like it is to me.
Yep.
No, I think
Hyper-local,
so, but I
totally.
think going back to what Tim said, it's also the fact that, just because it's in a certain neighborhood, if it's not priced for condition, then, and here's the downside to what Chris said. Those 20 buyers might come look at it, but I can guarantee you he got 2 offers. But I can guarantee you if he had gotten 0 offers, every single one of those 20 would be like, man, that was a great house. Why did it not go into contract? So people must be seeing something that I'm not seeing. So I think too, it's very true. And there's been a number of these examples that on this call and others throughout the last few months that people have given, where it's like, if something doesn't sell quickly, it's way more likely to sit on the market for weeks. But some crap sometimes, if they can just get 2 people very interested in it, they might sell for over list price week 1. But
And
people, stuff is sitting.
to your point on that, we did have 6 or so that were circling the wagons, that one, hey, let me know if you get any offers in. Let me know if you get any offers in. And then once we did let them know that we had offers in, ghost. So a lot of buyers are looking for that deal. So we had one that was getting ready to come in 30 grand under list on a new listing that now wasn't even going to put in because they knew they were already out. So I think there is buyers that'll do that, but they're looking for a deal maybe. And so if you don't sell it right away, they might come back and put in an offer, but expect it to be under list.
Yeah, I definitely think that there are bargain hunters out there. And I mean, obviously, like, things have definitely slowed down, not necessarily at a greater rate, I think, than before, but I just think it's been a gradual change in the market over the last year. And I think, other places like Austin and Florida, especially, and some other pockets within the country, a lot of news coming out of there about a drop in prices and people on the internet saying that this is just a foreshadowing, blah 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 blah. And so you've definitely got some bargain hunters out there that don't have motivation, that just want a deal, and they may get some right as we go into the fall if you have sellers that need to move that overpriced. So it'll be interesting to see. Total number of showings, again, pretty much in line with the last couple years. Last week we did drop below the last 3 years, which is something to keep an eye on. It happens at times, so I'm not sure it's something that we need to freak out about by any means. But you can see 4th of July is definitely not typically the time. What you do see here, though, is that the weekend that gets impacted by 4th of July tends to change depending on what day of the week the 4th of July is. So when 4th of July was earlier in the week a couple years ago, the weekend before was more impacted. It looks like last year, maybe the weekend after was more impacted by the showing drop. So that's kind of something. See, it looks like when it was, what was it, 2 years ago, it would have been, is it Thursday or Friday this year? I think it's Friday.
Friday.
So yeah, 2 years ago it was Wednesday. Nobody knew which weekend to travel in. So it was basically split in both weekends. And then last year, once it became Thursday, everybody took the weekend after off, it looks like. But we do see a little bit of a rebound in buyer activity the next weekend, but then you can see it definitely traditionally trails off quite a bit after 4th of July. So again, if you have a seller that isn't ready to get on the market this weekend, this is a graph I would absolutely be showing them if you're talking about the importance of pricing your property correctly. That the total number of showings in the market, you've missed the window. You've missed the window, and it's down from here. So the risk of overpricing is pretty significant. And then when we look at showings per listing, we continue to trend below last year. So again, to Chris's point, I think Chris's point was more attached to the number of offers, but certainly the number of showings has been per listing on average has definitely been fewer by about 30%. So interesting stuff. Last but not least, this did not get updated, so let's ignore that. All right. Anybody else have anything before we jump off? I'm a couple minutes over. So
I had a quick question. It seems like a lot of houses are going back on market. Is there any stats to show if that's ever up or down? Or I just kind of wonder with prices, interest rates, and I know there's different reasons, inspection, whatever. It just seems like, and I could just be happening to look at the ones that are jumping back on, on the market. I didn't know if that's.
I think, does Altos track relisted? I feel like they do. Chris, are you still on here?
Yeah, they do. They
Okay.
track relisted. Columbus market 7% right now.
I just wonder, a year ago, was it 7% every year? I don't know.
I don't know if I can compare it.
When you guys were talking,
Oh,
I
yeah.
kind of wondered.
So it was, it was as high as 15% in mid-June. Now it's down around 7%. But a year ago it was about the same, 15, and then dropped. It's
So,
weird. Yeah, the relisted was actually a lot higher in 22 and 23. It peaked at like 20%. According to their, at least at Columbus as a whole. But again, I think you'd have to be hyper local to really look at an area and see.
Yeah, I think that everybody that, like you said, this time of year, there's more pendings. And so there's a higher number, 15 or 7% of a bigger number of pendings is always going to feel like there are more. But yeah, I think the percentage hasn't varied a ton. So, all right, I just realized what time it is. I'm actually 6 minutes late for another appointment, so I hate to cut this off, but I appreciate you guys coming on and appreciate the participation today. And if you want the slides, just email me at troy@marshhomegroup.com and I will email those to you, or Allison will. Thanks, guys.
Thanks.